Welcome to The Sample, a quick discussion of auditing concepts and terms that will help you do your work. Conducting an audit in accordance with auditing standards is no small feat, and I want to support you. We'll be referring to the GAO, IIA, and AICPA literature to bolster our conversations. Let's get started. In this episode, we answer the question, if I'm following Yellowbook standards, can I both create and audit the financial statements? Well, I can't give you a 100% sure answer. Because yes, technically you can, but man, the GAO in the Yellowbook makes it as hard as possible. They put up as many hurdles as they can muster to prevent you from doing that. They stop short of just saying no, and they instead leave it up to your judgment in some ways. I was teaching this topic, which gets most of the heat when I'm teaching a live class on Yellowbook standards. This is the one where people get upset when I talk about independence and creating financial statements. And I had a CPA come up to me on break, and he said, I hate the GAO. They make me lie all the time. I'm like, oh yeah? Tell me about that. And he was telling me that his clients are small governments and not-for-profits, and they don't have the ability, the capacity, the knowledge to create the financials, and they expect him to do it and him to audit it too. And he has to lie about their skills, knowledge, and experience. There's an acronym for that called SKI, which we'll talk about in a little bit, in order to justify that that's okay for him to do that. And he said, I don't like the GAO because they make me lie. And then I, reminded him, I said, I know, but what if the public knew that you were both creating and auditing your own work? I mean, what we sell is our objective, independent opinion about the subject matter, and you're not objective anymore because you created it. And he didn't like that very much. So he's still going to do what he wants to do, and he's still going to work through these hurdles that the GAO puts up and still do what he wants to do. But he's going to have to write it all down and then wrestle with his own conscience about that one. Okay? So here's what he has to do. We all have to do if we decide to both create and audit the financials. We've got to apply the conceptual framework, document the conceptual framework. We've got to make sure the client has SKI, document their SKI. We've got to come to an understanding of the client's responsibilities regarding the financials, that they're responsible for the financials, and document our understanding with the client. Document, hurdle, hurdle, hurdle. And what the GAO is hoping is by the time you get to, the second hurdle, you're like, yeah, okay, maybe I shouldn't do this. Okay. But that's not where everybody gets to. Let's talk about the conceptual framework first. It's like a little subroutine, a 3-step process where you think through the threats to your independence. You decide if they're significant. First you identify them, then you decide if they're significant, and then you apply safeguards. You do procedures and take actions to safeguard your independence. So the threats, the entire list is here, 1 through 7, that's presented in the Yellow Book. Creating the financial statements triggers 2 alarm bells for independence, 2 threats. The self-review threat, where you're creating the work that you're turning around and reviewing. And then management participation threat, because management is supposed to create the financials. I could argue, too, that there's a familiarity threat. That's number 4. But I'm just going to stick with number 2 and number 6. So definitely that's a threat. Now, the GAO, usually for most threats to independence, lets auditors think through the next step themselves. So that was identifying threats. The GAO usually lets auditors decide this, number 2. Are the threats significant? However, in the 2018 revision, the GAO, again, trying to prohibit auditors from creating and auditing financial statements, added a new paragraph. And it says here that the threat is significant So they made the decision for you, and you must apply safeguards. Remember, you can pause the video at any point and read these longer paragraphs if you would like to. Okay? So they decided for you. It is significant. It is a threat. It is significant. Now you apply safeguards. Now the GAO doesn't give us exactly the most robust list of safeguards in the Yellow Book. But one that could be relevant here is having an auditor who is not a member of the engagement team review the work performed. That could help us. All right, so that's the conceptual framework. Identify threats, decide if they're significant, apply safeguards. That's hurdle number 1 with its little sub-steps, right? And document your application of the conceptual framework. Second hurdle, determine if the client has SKI. SKI stands for skills, knowledge, and experience. And essentially, we're asking whether the client can tell if you made a mistake. And if you create the financials and present them to them and they could not tell if you made a material error, then they don't have SKI. This is a lengthy paragraph that describes how the client doesn't actually, to say they have SKI doesn't mean that they actually have to be able to create the financials, but that they can tell that you made a boo-boo. Okay? And then you get to document their SKI. And this is where I believe that CPA was lying, because he knew the client was completely reliant on him and had no idea how to read financials. But he had to make something up and act like they did. And then the last thing is to come to an understanding. So far you're still okay. I'm still doing it. You get to the last one, which is come to an understanding of the client's responsibilities regarding the non-audit service. And you must have them agree to the objectives of your service. The non-audit service, that's what the GAO calls consulting. And creating financial statements is a non-audit / consulting kind of engagement where you're helping to make the subject matter. Okay. Services to be performed, the auditee's acceptance of its responsibilities, your responsibilities, and any limitations on the non-audit service. Personally, I would recommend that you have them sign something when it comes to that, their responsibilities, but the standards don't actually go that far and say they have to sign. So just as a review, yes, you can both create and then audit the financial statements. However, you're going to have to write a memo that applies the conceptual framework. You're going to have to apply safeguards. You're going to have to document the client's SKI and document that the client has taken ownership of the financial statements. So lots of writing, lots of thinking, lots of, it's almost like, are you sure? Are you sure? Are you sure? That's kind of what the GAO is doing. You sure you want to do that? You sure? You sure? It's like your conscience speaking to you, right? Bottom line, 3 major hurdles. Bottom line, I'm sure that CPA is going to do whatever he wants to do, but he's going to have to fib to get him there. And that wraps it up for another episode of The Sample. True to the nature of a sample, we didn't talk about everything, so you've probably got questions. Write to me at Leita@Yellowbook-CPE.com, and I'll do my best to fill in the blanks. Thanks for playing.